All right, guys. I want to talk about BTC here. Couple of very important factors that we just need to people just need to be aware of and understand. There's a lot of groups out there, and they're talking and they're making calls and they're doing this and making shorts and then getting chopped up and taking longs and they have no idea what they're doing. Now, so I just want to talk about a few very important concepts that will keep people safe and stop people getting really, really chopped up. Now, what's this? The daily? Okay. So, as I've said, let me go to the 2 week actually. I wanted and still think that this area will need to get filled at some point on Bitcoin. Now, two very important principles here that Bitcoin loves BART patterns, right? It loves BART patterns. This was a BART pattern back down. This was a BART pattern back to the upside. Now, Bitcoin is potentially forming a BART pattern here, right? If we have a little bit more chop here, this could be a BART pattern back to the upside. And, then, then the bulls need to prove themselves and this needs to go higher. You would then have some sort of, you have that trend line here. We need to form a BART pattern along here and break back to the upside. So, but I think that there will be a whip down into the area down below to take liquidity in this wick, before getting a real move back up. Now, then the game is in the ball is in the bull's court at that point. So that is something to look out for, the BART pattern and a dip into liquidity. Now, another very important concept. If I go to the 12-hour chart here, right, this is very important. Now, actually, let me just look. Let me just go back just for the sake of it. Where is that? Okay. Well, I suppose we'll start at the start of the bull market, will we? Start here at the start of the bull market. Okay. So, and this fits for a few very important concepts about apexes and everything else for calling bottoms and understanding price structure. Now, when you're in a downtrend and when you get big drops, there's usually a lot of chop, okay? And when you get in chop, nobody has a clue what's going on. Everybody's calling this and calling that, but a lot of people don't know how to read chop and understand chop, or even more importantly, they don't know how to stay out of chop. They're too busy trying to make calls when they shouldn't be making calls. So the important concept here and the important thing is, and a very, very simple thing that people fail to miss, is when price gets above the white 100 moving average on the 12-hour chart, okay? On the 12-hour chart. This is when you potentially want to start getting bullish again, okay? Because after a drop, there's a couple of traders that taught me, 15 years ago nearly, that and this is a different concept for in the stock market, is if there's a fast drop, right, you do not want to buy, because it's probably gonna do this and then maybe go lower again. You need to wait at least 3 days. If you're a bit of a swing trader, that's what they used to teach me. You need to wait at least 3 days to get into the market. So obviously it depends on it. It could be if you're in a really how do I want to say it? If you're in a 3-day drop, you might have to wait 3 days, 9 days for it. So obviously you need to figure out the time frame and the substantial magnitude of the drop and all that sort of stuff. But anyway, after a drop, right, you can get a lot of chop. Okay, so you don't want to be trading this chop. You're knife catching, and you're probably not going to make a lot of money. Yes, you can buy these oversold bounces and buy these trades, and then take your scalps and all. If you're scalping, that's fine. But trying to understand chop is a different thing. Now, a very easy way I do it is you wait until the white 100 moving average is broken. Okay, yes, fake out here, whatever, but it didn't last long. You're back below it, but you got above that here, right? And you caught the meat of the move. This went into a daily apex and price went higher. That's now price broke down here. Okay, let's just mark that. Price broke down here below the white 100 moving average. I didn't mean to do that. Right there, price broke down from underneath the white 100 moving average. Right, and what happened then? You're in a bear trend. Okay, you're bearish. Yes, these bounces they're bearish bounces in a downtrend. Okay, this again, right? This again, if you had bought on a breakout above the, so we had the big drop. And now if you traded all of this, you were going to get chopped up. But if you waited and bought above the white 100 moving average on a 12-hour chart, well, you would have got the meat of the move. You could have traded that entire move. And if from memory, Bitcoin bounced 30%. Now that's a guess now, but okay, 40%. Okay, so now again, yes, you could have bought the drop. And when you get substantial drops like that, yes, you do want to buy that. But if you didn't buy that and you were trying to trade this, well, you want to be trading above the white 100 moving average. And when you get in here, you know, you can see the substantial move off that. There's a very fast move, and it was a lot safer to be trading it than the most of this chop. Okay, so there's another example. Now again, when price did come up, what happened? You went sideways, you ended up falling below it, chopped below it, and as soon as price started to break above the white 100 moving average here, what happened? Well, if you got long on that, you would have made money. You would have made very good money. Now, I made videos calling the bull market because this is a very extremely powerful pattern. Okay, and this is only a 12-hour chart, but there's similar patterns on larger time frames as well. But anyway, we were trading this in here to try and get involved on this, but then we did get long on a break of this pattern, and I made I don't know how many videos I made on this, that Bitcoin's going into a bull market, because I understood the pattern, I understood the moving averages and the price action. Now, if you got long on a break of the white 100 moving average, what happened? Well, you would have caught the entire move. Okay. Now again, Bitcoin broke down here, right? There's a failure, there's a breakdown below the white 100 moving average, and you would have, well, if you were short, you would have made money. Yes, there was a bounce back and a retest of it, and then a drop. But again, if you, after the drop, if you understand when you get a breakdown of a pattern, when you get a breakdown of structure, you can get a lot of chop, right? Look at all the chop. People were trying to figure out what was happening here. Now again, if you had bought and waited and had patience, and do not get chopped up and do not be losing your money all in here and messing about and getting screwed over, you know, if you had waited to right here, right, you find the break of the white 100 moving average and you made all that money, right? Very simple. Very simple, right? It's not rocket science, but the problem is people don't understand it. And yeah, I'm seeing you guys talk in the group about all these groups who are getting chopped up and having a clue what they're doing and all this thing. And that's what I want you guys to know. I want you guys to understand, you know, what I've seen over the years. And just notice again, you know, if you'd missed this first one, look at the chop. You break down below it, right? You don't want to be trading that chop. There's no need to. Where do you trade it? Well, the simple trade is right there on a break of the white 100 moving average. And look at you could have made the meat of the second move, right, from here to here. And that's, you know, a 40% bounce on Bitcoin. Well, depending on how much money and how much leverage, and you know, you could have made millions on that if you understood it. So that leaves us here. That leaves us to today, guys. That leaves us to today. Now we are approaching, but we're not there yet. We are chopping about. There's no need to be chopping. No need to be buying chop. Look at the RSI. Look at the RSI. If I move that to 53, okay, so you can see that where the RSI is. The RSI pushed up and it failed. Of course, why did it fail? Because we're still bearish. We're in bearish chop. Now, if I what's the word I'm looking for? If I add the break on the RSI right here, well, it's also the break in the 50 RSI. It's also the break of the white 100 moving average, right? And you'll probably see this time and time again. You'll see the break of the 50 RSI will coincide, you know, almost perfectly. Well, I don't know if that was perfect, but maybe, well, it did break it just after it. But it's pretty damn close if you can see it right there. And if you go back and do that, I don't have time in this video. I didn't even mean to make this video so long. I'll do one more just for the sake of it. Now, what happened right here? Okay, well, right there, almost to the day, well, maybe slightly afterward, but you can see that green candle. I should zoom that in now that I'm doing it, just so you guys can see it. Well, you can see right there. So right there on that candle that broke up above the white 100 moving average, well, what was happening? We were breaking up above the 53 level, right? And it'll coincide every single time, every time. Simple. There's no, it's not rocket science. So we are approaching the white 100 moving average, right? And this is what we need You know, I think we come down and take liquidity at some point down in here, whatever way it happens. You know, but there's no real reason to get involved, you know, until we break, you know, really this white 100 moving average. And that will coincide with a break of the 50 RSI, okay? You know, right here, for example, whatever. They'll coincide with each other. So by understanding these a few very simple concepts, it will keep you out of the chop. And if this does this right now and crashes, it will have kept you out of the crash. You will not be in. You will not be trying to long this, thinking it's bullish and all the rest, because it's simply not bullish just yet. And sometimes you do get crazy spikes, you know, back up or whatever, but they can be bearish spikes in an uptrend. Now, if price continues to get failed, to have failures underneath all of these moving averages, you know, these can push price lower, right? If this gets stuck here, you know, it can push it lower. And this is another factor why the safe trade is when you break up above the white 100 moving average. There can be failures at times, but if it fails, okay, you get out again. Okay, it's just that simple. But when you truly break them, price doesn't usually give you a second opportunity. It runs, it moves. So when you see these guys, these other groups and stuff, you know, making calls down here in CHOP and all the rest, you know, I hope this video just helps, maybe to help you understand that it's probably not the right time to be getting involved. You know, they're likely to get chopped up.